Good morning. I'm Eric Sapanik. This is John Caro. Welcome back to the Gold Spot.
Good morning.
Good morning. How are you, John?
I'm pretty good.
Well, we've got a couple things to talk about today. We got a couple of topics, one of which, couple of things that were said about Jamie Dimon had something to say about the banking sector. Maybe you can elaborate on that.
Well, he used an interesting phrase. He said the first phase of the crisis is over, implying there's going to be more. And then the latest reports out of Washington are that the banking regulators are going to impose stricter capital requirements for the bank. Sounds like gobbledygook. It means they got to hold more money, which means they have less to lend, less to spend. This is a move towards, I think, banking consolidation. We've got 4,600 banks in this country, and not all of them are healthy, and not all of them are going to be able to handle these new capital requirements. The results are the big boys are going to keep eating the little banks, and that's going to put pressure on all of us in our pockets and in our wallets.
Well, I think everything that I've read and watched is definitely there's going to be a huge consolidation at this point. You know, a lot of the economists talk about almost like it's a bad thing that there are so many banks out there. When you bring more banks together and eventually the big five eats them all up, that changes your society entirely. Wouldn't you agree?
No more competition, not good for the rest of us.
Well, especially when it comes to regulations and something like your money, because the way that money is going to be exchanged, you know, we know that we're more and more in the digital world of currency. There's a lot of people that have speculation that they're concerned about cash going away entirely. You know, these are all things that people are talking about, that their concerns are there, especially people that are our clients. I've noticed I've heard a lot of that. You know, once again, there's also more talks about de-dollarization. And this is something that we're going to be updating our report again, and you guys can always go to the Petrodollar report and ask for us to continue to send you the updates on our timeline. You can also text in and ask for that as well. Just text in Petro and be happy to send you that link. But what we're going to talk about next is definitely what's going on with the BRICS nations, and maybe you can tell them what that acronym means.
Brazil, Russia, India, China, South Africa.
South Africa, which they're all talking right now.
Well, they're acting. They're not talking. They're
Oh.
bringing gold back from the central storage places. They want it in-house, inside the country. We're really spooked by the freezing of the Russian assets. It also let them to start thinking, hey, we can control our own economy. You're going to see people pulling within their borders, but history tells us that doesn't work. We're too big an economy worldwide now. But what it does is it challenges the whole petrodollar concept.
Well, I mean, even more so than that, it challenges the currency itself. And one of the big reasons is they're talking more about using this, if they do come up with a new currency, that it's something that would have an actual commodity basis to it. So moving away from fiat and going back into a backed currency. They're talking gold, they're talking oil, they're talking even gems I've heard of. I don't know how that would ever work. But nonetheless, these are all the new big topics. What do you think would happen, John, if we saw a currency, even though we are the biggest economy in the world, China's not too far behind us, and to bring in I don't want to say a euro, because it's definitely not a euro type of thing, because the euro is fiat as well. This would be different if they are going the direction that they're talking about making a commodity-backed currency. I think that could definitely have a lot of impact worldwide. How could it not?
It could, but remember, historically, gold has always been the one most stable commodity for backing currency.
Agreed.
If you back with oil, if you back with wheat or whatever it is, and there's a famine, when oil production gets interrupted, the currency gets hit. Gold has always been that baseline, and I think there's a move back to gold because countries and governments are starting to realize that.
And if that's the case, then that means that gold, worldwide would become, once again, something that becomes more centralized. Something that I think people would find that their gold holdings, if they're living in a nation that does not have a centralized price on it, because you have to remember, back before we went to a free market with gold, gold was always categorized by price by government regulation.
$35 an ounce.
Well, that was after the confiscation. I mean, in the beginning, it was $20.
$20.
So, I mean, now we look and we say, okay, fast forward today, if we all of a sudden we saw gold becoming a commodity that was used for an actual exchange on other nations, how does that work with the US dollar? I mean, it could really become interesting how fast gold prices could escalate in countries like ours, due to the fact that other countries are now using it as not only a precious metal, but as a currency again.
Yeah, and it's going to put pressure on our economy. It's going to put pressure on our money.
I think the other thing that people might want to consider at this point is the types of gold that they're owning. And we're going to be talking about this next week on the Gold Spot Overtime, and you could tell them a little bit about what we're going to be talking about.
Well, we get a lot of questions about the difference between intrinsic and extrinsic value, the difference between spot price bullion products and products whose value is not based on the spot market, and sometimes it takes a little digging to sort it out. We're going to try to do that for you next week.
Right, so I mean, I think you might want to go ahead and give that a little bit of time if you do still not understand the total difference between, say, like your investment grade numismatic or your your bullion products. We're going to go into a little bit more depth about that. So something to tune in next week.
One more thing, we had a big event last week. I want to thank all our clients for jumping on it and helping us make it a success.
Yeah, the 4th of July sale, I mean, everyone that took advantage of that, you guys got fantastic deals. And we were very happy to see how much business actually came from that. A week that genuinely there's almost no action. We were busy, very busy for those 3 days. And thank you very much to all of you. I think that's going to wrap it up for us today. And have a fantastic weekend. We'll see you next week, and make sure you tune into the Gold Spot Overtime.